Hey, happy Monday, everybody. I hope you had a great weekend. This is your market update for March 27th. So mortgage-backed securities had a great week last week, which led to the third consecutive week of improvement in interest rates, which is fantastic. Unfortunately, that trend did not carry over into the market today. We're running into some pretty stiff resistance at the 200-day moving average. So keeping mortgage rates trading in a very tight range sideways at this point in time, which is fine, as long as we don't see any further deterioration, because we like to see mortgage rates headed in the right direction. Mortgage-backed securities opened the day down 42 basis points. At one point in time, we're down over 50 basis points, but have clawed their way back and are currently down only 32 basis points. Stocks, some good news came out over the weekend in the banking sector that First Citizens Bank, which is a North Carolina-based bank, was purchasing kind of what was left of Silicon Valley Bank at about an 18% discount. So of course, bank stocks are digging on that today, rallying, which is carrying the Dow higher. Initially, the Dow opened up 276 points off of its best levels of the day, but just slightly, currently up 257 points. NASDAQ opened down on the day, currently down 30 points. S&P 500 opened up on the day, currently up 16 points. So some news coming out this week. There's some appreciation data coming out tomorrow. On Wednesday, we'll see mortgage application information as well as pending home sales. On Thursday, we'll see GDP reading, a final GDP reading for Q2, as well as initial jobless claims, which remember is people filing unemployment claims for the first time as of last week. And then on Friday, which I feel like may be the biggest market mover, would be the PCE report, Personal Consumer Expenditures Report, which is a key measure of inflation that the Federal Reserve looks at very strongly when making decisions on monetary policy. I will say that for the longest time, inflation was kind of front and center in everything, that and employment. And I think now the market's looking more, especially with the recent issues in the banking sector, obviously that's playing a part. But I think there's some significant concerns about pending recession. We've been talking about that for a while, but I think inflation was kind of front and center. Now I think that recession may end up coming front and center. The Fed's they're in a very tough spot because they're fighting inflation through monetary policy, but they also want to be careful to not spur any significant recession in the economy. And of course, they have to be careful with the moves that they make and how that impacts the banking sector as well. We will continue to keep you updated. I hope that you have a great day, and I will see you tomorrow.